And that is Alvin from Dr. Wealth. Alibaba just released its first quarter results and it was a disaster, right? At least that was how the media put it across and how most of the shareholders of Alibaba has reacted because Alibaba reported a 96% drop in net profit. So it really looks like nothing is going good for Alibaba. And in this video, I'm going to break down to you why this is not a big concern and what has actually changed for the positive for Alibaba itself. Okay, so the first thing, as you can see here, the net income has dropped by 96%. Okay, so that is what the investors have been highlighting for the past 2 days. And the issue is because most of these losses are due to the fluctuation in the investment in public equities, right? That means Alibaba bought some stocks and the stock prices have moved up and down. So it just happened that in the first quarter of this year, the prices has moved down and that caused the investment to be marked at a lower value, and therefore the Alibaba has to take a loss for that, right? And that was a large part of it. So if we disregard some of these investment losses and adjust it basically, the Alibaba net profit would drop just by about 11%. Okay, so it is not a very accurate depiction of their operations, right? So therefore, I don't think investors should be concerned about that. But of course, there are some other areas that are not so good. Okay, so this is the bigger picture of Alibaba's first quarter result compared to a year ago first quarter results. So the good areas is that there are still some growth drivers, like for example, the international e-commerce, Cainiao Logistics, and Local Services Group has grown double-digit percentages, 19% to 45%, right, among the three of them, among the three segments. But the core business, which is the China e-commerce, Taobao and Tmall, was only growing at 4%. Okay, so that is the slowing part, and that has not accelerated, or we have not seen double-digit percentage growth for many quarters. All right, and even their cloud intelligence group, which is supposed to be a growth driver for Alibaba, has also been very sluggish, growing at low single-digit percentage year on year. Okay, so 3% in this case. So in terms of growth rate, it's not there. Okay, at least the most important areas is not there. It's not good enough. It's not high enough. There are some bright spots in logistics, in international e-commerce, but that's about it. And the key thing that I want to highlight, right, even though I say that the 96% drop in net income is not important, but the 3% drop in income from operation, that is important because this signifies that despite the growth in revenue, the amount of profits being extracted from the business itself has lowered. Okay, so that also means that some of the margins have suffered for Alibaba. So overall, I would say that it's still not a good results, right, without a doubt, but it's not as bad as what the headlines say, minus 96% in earnings. So investors have to acknowledge or understand that it is due to paper losses. Okay, they are not due to a fluctuation in share prices, right? Which actually Warren Buffett has also said that it should not be counted as losses or gains, right? Because it distorts the earnings. It causes the earnings to fluctuate a lot through the quarters. Okay, so that's the first thing that you need to know. The second thing is that the stock was punished after the results were released. The stock dropped about 6%. Okay, so it's not a positive thing. And then thereafter, the stock price actually rebounded, right? So that is something that I think people find it mind-boggling, right? Why there's a drop and then suddenly there's a bigger jump in the share price thereafter? So there is actually a reason, and I believe that is due to the disclosure, the 13F disclosure, right? Because in the US, the big funds have to disclose their holdings, right? Holdings in US assets. So one of them is Michael Burry, and he is someone who is a popular figure in at least among the investing circle. And he's best well known in the movie, right? His story was narrated in the movie The Big Short. That was during the subprime crisis where he shorted the mortgage securities, right? So he has been bullish in the China equities since like the previous quarter, and he bought JD.com and Alibaba. And the first quarter of this year, he added more position, and that increased 80% stake, increase in 80% of his original holding in JD.com and another 67% increase in Alibaba holding. So right now, JD.com and Alibaba are his two biggest holdings in his portfolio, almost 20% of his portfolio for these two stocks. And average price he bought in JD.com was about $29.53, and Alibaba was about $80.42. So actually, both are not very far from his buy price, right? And he's still buying. So I think that gives confidence for investors that these big funds are moving in, and therefore some of the investors buy up Alibaba as well. And another surprise was David Tepper, which is the hedge fund manager of this hedge fund Appaloosa, and he is a billionaire, right? He has a 20.6 billion net worth, okay, and he definitely is also another prominent figure in the hedge fund world, such that some investors do like watch his moves. And his latest move is Alibaba as well, increase in stake by over 158% in terms of the original holdings. And now currently Alibaba is his biggest portfolio holdings as well, at 12% of his total portfolio value. So I believe these are the news, or these big moves into Alibaba are what caused the share price to move up, because it coincided with the release of the 13F. Okay, so that's good news, and there are more good news. Okay, another good news is that if we look forward, and this Alibaba CEO Eddie Wu have also mentioned that two key markets, which is two key segments, which is China e-commerce as well as Alibaba Cloud. So for the China e-commerce, he expect that the growth will return to healthy levels. Okay, I don't know what's a healthy level, whether it's a double digit or not. He didn't commit, but he said that by March 2025, you should see the results. Okay, so it's something positive, right? And the second thing is the Alibaba Cloud, which is going to grow double digit by the second half of the current fiscal year, right? So which is also a very encouraging thing that we can look out for, right? So which means that growth is likely to increase further for Alibaba. Okay, so that's something that is positive. And in terms of the share price movement, Alibaba has gained 25% from a month ago. So it isn't that bad. Okay, isn't that bad. The whole Alibaba is recovering together with the rest of the market, with the rest of the tech stocks as well. Tencent, of course, have gone up more, 32%, and JD.com has gone up 35%. Generally, this is good, right? Alibaba is going up in tandem with the rest. And one last thing about Alibaba is that he has a lot of cash. Okay, and short-term investment, which can be fixed deposits. And Tencent has about $55 billion US dollar in cash and short-term investment. Alibaba has 85 billion, and JD.com has 24 billion. So you can see that Alibaba has the most, and it represented about 41% of its market cap. So even from this point, you can see the valuation is not expensive, right? Whole market cap, almost half of it is backed by cash. And the good thing is that this cash can also be used to do share buybacks, right? Because if Alibaba share price is so undervalued, doing share buybacks would increase the shareholder value, and as well as exploring growth, right? Because we see that the international e-commerce is doing well, Alibaba would be able to fund more of this expansion and accelerate the growth some more, and also to roll out new initiative for their domestic e-commerce. So we can see that Alibaba is actually in a very good position, right, in terms of the strength of its balance sheet. So in summary, Alibaba has strong cash reserve, can do share buybacks, can do expansion, and the CEO have also mentioned that the growth rate is likely to improve in the next few years. So we just need to wait for that to happen, right? We need to see that growth accelerate, and I think that more investors will gain confidence, and valuation will also increase because of the higher growth rate, and hopefully the share price move in tandem as well. And lastly, the big name investors, right, the US hedge fund managers have started to recognize the value in Alibaba, and they're taking big stakes, right? Because even we see Michael Burry and David Tepper, their funds made the China companies the biggest holdings in their hedge funds, right? More than 10% at least of a weightage in our portfolio. So that gives investors that hope and the confidence that things are turning around, right? For at least for Alibaba. Okay, so I don't think I agree with a lot of the doomsday naysayers that Alibaba 96% drop in earnings is a big thing, right? It's due to the fluctuation of the securities, and rather than its operations. Okay, so hopefully now you get a better understanding, and do subscribe to Dr. Wealth newsletter so that you get more regular updates about China stocks and also US stocks and Singapore stocks. Okay, do like this video, give me a thumbs up, subscribe to the channel, and I'll see you in the next one. Goodbye.